What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 89, and this morning we have our very special, now recurring guest, Kathy Hall, here with us in person, which is always a nice treat. Kathy, welcome.
Well, thanks. Yeah, it's great to be here, and the weather is fantastic. I drove up from New Jersey, where the weather is also pretty good, but just coming across that bridge to Jamestown, I'm like,
Yeah.
That was great. So it's wonderful to be here. Thanks for asking.
Yeah, it's amazing how many more people want to come visit us once it's, April, May. I was like, oh, yeah, I should, I gotta come down.
July.
Yeah.
It's going to be a legendary visit.
No, but it's great to have you in person. I always love having people here at the podcast studios in Jamestown. It's nice to use the space and great to have you in person. I think just to kick things off, maybe if people haven't caught the past ones, I think this is our now either third or fourth sort of quarterly episode. So it's been great having you on frequently. But if anyone hasn't caught some of the past ones, maybe you want to just introduce yourself briefly.
Sure. My name's Kathy Hall, and I am the executive director of petrochemical products for Opis. And my division is mostly the Petrochem Wire brands. Petrochem Wire was a company that I founded in 2007 that became a part of Opis in 2018. Opis itself is owned by Dow Jones. So Petrochem Wire by Opis, a Dow Jones company, is where I'm at.
It's a mouthful.
Yes. But at a personal level, I've been watching chemical markets as a journalist and an observer since the mid-90s. So, I've seen a lot of things, and depending on how good my memory is, I can say, oh, remember when crude was $11? Because I do. Yep. But, so that's nice. I was thinking about this too, about the human component versus AI. It's that, sometimes it's nice to have that assistance, like with GPS or something, but yep. It's, the human element can sometimes make a difference in perspective.
Yeah, it's been one of my favorite things about, the chemical industry as a whole. It's a very personable industry. Technology has obviously evolved with systems and portals and all kinds of good stuff to maybe help facilitate orders and improve communication. But at the end of the day, it's who you like doing business with. And it's a very personable industry. It's an industry that still relies on trade shows and events and traveling to meet customers. I love that part of it.
Yeah. And thank goodness that, travel is back and conferences are back. I think the recent AFPM felt a lot more normal than even last year's AFPM because we really did have the global element there this year, and that just gives it that good feeling. Yeah,
I was going to say, speaking of obviously travel and conferences, we were just at the AFPM down in San Antonio a couple weeks ago now. One of my favorite events and places to travel to. It's always a great week, a busy week, a lot to wrap your head around with meetings and events and dinners and all that good stuff. But you get a lot done in a short period of time, and such a cool city. I love San Antonio. So I was certainly going to ask you, obviously, I know we saw you down there both at our cocktail party and and in some other meetings and running into you. What was the general kind of overview and mood from a lot of the meetings you were having with colleagues down there?
Well, what I love most about conferences like AFPM is there is, of course, a performative part of let's sit down, my team and your team, and talk about this. But there's such an easy social component that is in the hallways or at the cocktail party that you can really talk to someone, especially when you're in the business I'm in. I'm not at a cocktail party to write a news story about, what Ben said at the chemical company cocktail. That would be a little awkward, but I could really have conversations with people that otherwise might say, oh, demand is good. Where I'm like, how's it going? They're like, better, but I'm not going to really use the G word yet,
Right.
And you just get more of a truer sense of how it's going for the different market segments and what, who really took the most pain. I mean, coming into AFPM this year, for anybody along the propylene chain, they were still reeling from the shock of the U.S. price spike in the spot market that had only occurred a few weeks before.
Yep.
And that was fresh on everyone's mind. And how did it really affect as many people as you thought, or were some people just watching it saying, thank goodness my contracts are structured differently, whatever that could be. But I always find the most interesting comments are about demand. And that's something that I think is really obviously one of the major drivers throughout the world, but it's been less of a driver really in the past 6 to 8 months. And I think when we spoke in the fourth quarter, it was, it wasn't even cautiously optimistic. It was just cautious,
Yep. Yeah.
So it was a hope that this is the end of the year destocking, but I do think that that's largely come to be the case as we've gotten into this new year. The first few months, a lot of the derivative operating rates are certainly higher than they were. So there is a demand rebound. Whether it's strong, it's that's up for debate. But I think that the demand component is stronger. I think what I might have said the last time we spoke was that demand is nothing you could rely on to carry the price. And now I think that demand has a stronger role in being able to set some sort of floor for a lot of markets.
Sure, that makes sense. Yeah, it was interesting by the fourth or fifth or seventh meeting we had at AFPM. You kind of hear the same thing in different words from a lot of people. I think the general mood was everyone's down 15, 20, 30%, and oddly enough, people were still optimistic. You could have these meetings when everything's down 20%, and people could be all pessimistic and grumpy about it, but a lot of meetings people were relatively upbeat. I mean, that stuff was slow. There's, I think, optimism for the later half of the year. People are trying to have a positive outlook, and certain industries may be doing a little bit better than others, but it seemed that was kind of the mood that we heard over and over and over again in different words from different people. But you really start to see a trend pretty early on at places like the AFPM with having so many conversations at once.
Yeah, and I think also, again, conferences have been back for a while, but I think that global conferences are really the ones that are kicking into full gear this year.
Yeah.
Where, sure, I went to the AFPM the previous year, but there weren't a lot of people outside of this continent there. But yeah, that sense that I get at conferences is really, it's still the pandemic and the lockdowns and all of what has gone on from late 2019. It's not like the pandemic itself. It's debatable depending on who you talk to. Is it over yet, or is it just weaker or something? But we all have a sense that we've gotten through something. And I think maybe I agree with you that people have said over and over at these conferences, well, demand's not terrific, but I'm feeling okay, because man, they sure saw worse.
Yeah.
They saw demand be what it is now or worse, and your prices, your costs were out of control. And even if you could make any sort of a profit on certain products, shipping them anywhere was another nightmare. So I feel as though, there's maybe a kind of tacit sense of gratitude that things aren't wild like they had been.
Yeah, absolutely. And a big part of it too is, I think, in planning and thinking what normal looks like. You obviously, if you compare your system today versus year to date last year, obviously it's a big difference. But should you be comparing stuff to 2018, 2019 type levels, like figuring out kind of what that normal actually looks like, because stuff's been so crazy, especially in our industry the last 2-3 years.
Yeah, no doubt. I mean, certainly I think, for us at Opis, and also for our consultants at Opis, the Chemical Market Analytics Group, that 2019, I think, is a very reasonable baseline for demand, right? And that would be for jet fuel, anything,
Sure.
that. But when you're looking at where you've been as a business, like your business or a major, things have definitely changed, and there was certainly a time, probably from the second half of 2020 through the middle of 2021, or maybe even through the end of 2021, where so many surprising things happened that not exposed per se, but maybe highlighted what risks you didn't even realize you were taking.
Yeah. Yep.
You and I were talking a little bit earlier this morning about logistics and transportation logistics, that if you found yourself in a transportation situation, it was time to look at, well, what was our commitment? Why did we no longer own rail cars?
Right.
Why were we only leasing so many? And maybe that's changed now. So I think that there's a different sensibility around the word risk itself, that maybe 3 or 4 years ago, people in the market that would say, we don't manage risk. And now realizing, well, risk is actually more than playing the futures market.
Sure.
That managing risk is really looking at your assets and all of those things that you might not have considered to be risky positions until they prove to be risky positions.
Yeah, the logistics thing is interesting. Like we met with suppliers in Europe, and they have contracted a number of ISOs they can ship over quarterly or whatnot. And today those rates are still a bit high. I think ISO rates and container rates are coming off, but they may be on a fixed quarterly tender or whatnot. And we asked them about it, like, hey, your guys' logistics costs are too high, and they're like, yeah, we know, and they're high and they're coming off. But in the middle of COVID, when stuff was skyrocketing and you couldn't get stuff on vessels, the shipping companies helped us out, and it's not fair to now renegotiate when it's in our favor. So it's I think you're still seeing a lot of that too, with maybe some higher price material coming in between the energy costs in Europe and some of those logistics tenders kind of working their way off. So yeah, the logistics industry in terms of risk and managing has certainly been interesting.
Yeah. So you were mentioning energy prices in Europe.
Let's talk about it.
Yeah, I was going to say, I mean, I think that overall Europe is still seen as fundamentally disadvantaged with its energy prices. And then, recently with different labor actions occurring, in France and stuff. So there's that is still a market that in my own opinion only, that demand is not there to save the day. And there's a lot that needs saving, So
Sure.
If the market is kept balanced because of a supply outage, that's not the strongest fundamental. So that's where I think that prices, if there's strength to them, it is, it's, some of them are cost driven to an extent, but that supply is still, I think supply is still definitely in the US and in Europe too. Supply is really the driving factor of supply availability. I think Asia has been more sensitive to energy costs, but again, any region that is really dependent upon naphtha for its chemical complexes will be more sensitive to the energy costs than other markets. Like here in the States with the ethane and propane prices, we've certainly had movement over the first quarter, but they're really not. The ethane price in particular is not a factor for driving anything per se in the U.S. in as much as if it spiked, sure, it would be a factor, but it's been steady. So
Sure.
It really hasn't done much. But at the same time, that's a highly advantaged cost globally. So if you are running chemical complexes on Mont Belvieu ethane, well, then that puts you in a regional advantage as well.
Right.
So and that's been something that maybe if during the the lockdowns and all sorts of things, if you weren't able to get that, you made sure that like you say, that's one of the areas where you look back going, maybe it's not the best price I could get, but at what cost?
Right.
So
we've seen, I know at least in the U.S., like natural gas prices have come off significantly from the highs that we saw over the wintertime. I think we've seen European natural gas prices coming off as well. Obviously, I think it's still an exponential amount over what we're seeing here in the U.S., but still high. Yeah,
they're still a little bit below $50 the last I saw. And yeah, that's still, I don't want to use the word crazy in a pejorative sense, but that's really, $2 versus $47. It's very clear where the advantage is here.
Yep.
And that's what I mean. I think that fundamentally we've talked about this for several years now, that I don't think that Europe is in a dire situation, but it's been a real challenging environment. That I think that fundamental challenges are really just sitting there the whole time, with Europe, with different cost structures or locational challenges, but you factor in the energy prices specific to Europe, especially amid geopolitical things, then it's really taken a lot of control away from market leaders in a sense. And that's got to be endlessly frustrating. But and also obviously Europe has a big effect on the rest of the world.
Sure.
So just looking at benzene or ethylene, that who's the high priced in the world and who's going to pay the most, and what does that affect what gets sent somewhere else and what doesn't.
Yep.
So that's something we're still seeing playing out very much.
Do the folks you talk to see European natural gas coming down to normal? I mean, I guess pre-COVID or pre-war levels. Are they going to start trickling down? Are they going to go back up to the crazy levels we saw over last winter? What are folks saying kind of about the rest of the year? Do you have any?
Well, I mean, I agree. I think, you can find a lot of opinions that say, they're fundamentally over time, they do have to normalize.
Yeah.
However, I think that the extent of the risk of putting a lot of dependence upon a particular source or structure really was laid bare in the past few years, and we've seen massive changes in lots of areas throughout the European industry for just not relying on that anymore and being open to natural gas from other regions and being open to energy and naphtha and ethane and ethylene and all sorts of products that to avoid being in that situation. And that's where we've seen infrastructure changes and investments that seem it appears to take place quickly, but I do believe that nobody in Europe was necessarily caught by surprise, but it did for some turn into the worst case scenario.
Sure.
So at that point, if you see certain companies going to management or investors saying, okay, this is the worst case scenario, and to avoid this, remember that plan that we had. Could you release the investment money? We will build this within 1 to 2 years, and then we won't have that risk.
Right.
I think that we saw that multiple times, and that's a market that won't go back to that level of risk. So that's certainly an evolution in that whole situation there.
That makes sense. Thinking about oil as well, I know we've seen oil prices kind of start to tail off in the back half of the first quarter, and then I know we've seen recently the news out of Saudi Arabia that's now pushing prices maybe back up a little bit. I mean, at lower levels, I think we're around the $80 level today, which is obviously down from over $100 in the back half of last year. So things still trickling down, and I'm sure that's playing a role in some of the derivatives you follow.
Sure. And I mean, to what we were talking about earlier, when you can't rely on demand, you force your hand with supply, and that's what we're seeing. It's usually not a long-lived trend.
Yep.
So I do think that, it gives short-term opportunities because, with anything, and we see this in the chemicals too, something I particularly love about the evolution of some of the chemical markets in the U.S. is the evolution of the futures markets.
Sure.
So it's not just saying, well, what are crude futures or natural gas futures doing? What are ethylene futures doing? What are propylene futures doing? I think that's really cool. One of the more satisfying things I've seen develop over the past 15 years or so in those markets. And that's where you can see those specific trends, and if they are being affected by energy or if they're divorced from energy, and how far out does that condition exist? Something that, the natural gas liquids markets also have pretty robust futures markets. So we can see, for example, in the States, we do have backwardation in ethylene, propylene, and benzene. And we do in ethane, but not necessarily propane. So, it's interesting because it's not a forecast, but it's letting you know that when you're backward, your highest price is this month, the next month, and there we go. So what's the play to make when you're trying, everybody's situation is different in every day in the market. What's your situation? You have a need in July. Well, you have a July market that you can really look at and see how that works. And maybe your July market involves propane and propylene and polypropylene. You have 3 different situations going on in 3 different markets, not just crude plus.
Sure.
So I think that's a real interesting, just an interesting thing that it gives more options to people.
Yeah,
for sure.
Absolutely. And looking ahead to some of those derivatives, I know you mentioned benzene a little bit. We used to kind of track benzene on our podcast, and you kind of see oil move up and benzene move up and down kind of equally. And I think you kind of mentioned the two are sort of going in semi-different directions these days. We've seen benzene track up from the $3.10 range earlier in the quarter to I think it's $3.60 these days, at least on a contract basis. So certainly moving upwards.
Well,
What's
it
your
had been
take?
even higher, right?
Yeah. Oh,
and
yeah.
now it kind of receded a little bit.
Yep.
And yeah, and again, that's interesting, and it speaks to that benzene's got its own personality, that it's not a function of crude or gasoline, although
It's the first person to ever give benzene a personality. That's giving personas to each of these.
I got a whole thing on ethylene and propylene. Yeah. But yeah, that benzene itself, it's had it certainly had its moments over the past year with styrene operating demand, that it's so sensitive to the styrene operating rates, but also that the entire aromatics complex is affected by ethylbenzene demand and gasoline, and toluene and xylene demand and gasoline. So, that's why it's always very important to see where refinery operating rates are. We are, driving season is here.
Yep.
So what does that mean? Well, it's already been prepared for. So now we're just watching the economics of it. And so all the plays are short-term plays, because the long-term plays were made, back in January for this time. So we're here. So I think that that overall the benzene market itself, again, it's always chasing who's the low cost and who's going to pay for it. And then from my understanding, is that's resulted in material coming from Asia to the U.S. the volumes have gotten lower and lower. So there's not as much coming. There is some coming, but not as much as maybe is needed.
Sure.
So there could be a price floor there. Maybe it did get overheated, and that's where you see what's really, it's not necessarily a price slide. Maybe it's more of a correction. I think that's where the spot market is extremely useful, because if people say, well, benzene dropped, look at that, March to April. Well, the spot market has really been sitting in a little circle now, right around that contract price. So maybe this is the right price for right now.
Yep.
I think that we had a lot more confusion in propylene, because in March we had a very unusual spike that I don't think a lot of people saw coming in terms of the extent of the spike. That at the end of February in the U.S., the polymer grade propylene was mid 50s, and that was coming up a little bit. But at the end of last year, it was in the 30s, and it wasn't so terrific for producers and really the chain in a lot of senses. And then we're in the mid 50s, and then March 1st bids 65. And then March 2nd bids 70, and then you're getting material that's trading higher for prompt delivery, and it's telling a story, but it's the effect for it's telling a story that might involve very few people, but the price itself has such a large effect that when the month is said and done, well, the contract price ended up, jumping up 8 cents, and it's sitting there. And we've seen the spot price. We look at how sustainable is this price, because I think that of the polymers, polypropylene demand is one of the more challenging areas compared to other polymers. Not that it's necessarily bad, but that it's that when you're looking at how sustainable is this monomer price on that monthly contract basis, because we'll go through it all again in a few weeks of what did April do.
Yep.
What April's done is really, now we're down in the 40s.
Yep.
So it's there is some, maybe you can call it a sense of correction, but I think the propylene is still kind of seeking its own level here.
So you mentioned just a few players kind of driving those big increases earlier in the quarter. What do you attribute that increase to? I mean, was there like a severe unexpected uptick in demand, and all of a sudden more material is needed for downstream applications, or what do you attribute that spike to? Can you tie it to something specific?
Sure.
Or?
Yeah, and I don't mean to speak with authority, like I know it was only how many people. I don't know, but you can see in the trading volumes, there wasn't a whole lot of volume going at those prices. And then it seemed as though there was a greater sense of supply security, that those prices began to drift down. So that's where I feel like the story that was being told, again, for me, because I felt it in my heart, that's how I get with propylene.
Yep.
March 1st, my heart was like, what is happening? And March 2nd and 3rd, and will this end? It just felt like a panic. And perhaps there was a subset of people that were in a panic. That's what always drives a price spike, is that sense of panic. And that's where, again, any reports of demand were simply not matching up. So maybe the demand was very specific to demand this week is crazy.
Sure.
Because we don't have the product.
Yep.
So it's all relative, but it was a rare market for propylene in that sense. I think back to, again, we were talking about, having years on the planet and using AI rather than relying on AI that I mean, hopefully you might remember 2008.
Mm-hmm.
Okay.
Oh, yeah.
All right. That, that propylene had, crude oil was almost $150 and that propylene was above 80 cents. And how sustainable was it? Because like with any product, this is not just a propylene story, but when the price drops so quickly, it's really very disruptive to inventory, and being able to pass it along through the chain. So it's really, I felt as though, again, in my observation, because I don't actually participate in the propylene market, but my observation was that March was something people got through.
Yeah.
And here we are. And an interesting thing, though, that I noticed about the March propylene in the States, because of the futures market, is March is up at 70. Well, in February we had 56, and April was 50. March goes up to 70. April's still 50.
Mm-hmm.
So this, again, it helps inform you of more nuance about the situation. So at this point, we saw this in benzene too, that you saw this backwardation really widen as the price was jumping up in the near term, but that next month was not really going anywhere. So at this point, when the prices for propylene and also for benzene were coming down, that April price was really the same.
Right.
And as we get into April, and for propylene, we're in the low 40s, that we've got the outer months in the high 30s.
Yep.
Yeah. So we still have the price strength in the front for a lot of these products, but that there's not such a big distance to the outer months.
Sure. Yeah, I know our product manager sent out what propylene had settled at. It was kind of two things. It was propylene settled here, and then we're hearing spot numbers, 10 cents under, whatever. And people replied, was like, so there was a contract increase, but the net result is a decrease. It's like, yeah, sort of, in a way.
Yeah. And that always speaks to how you structure your contracts.
Exactly.
That how many times I've heard people saying all of my volume is tied up in one price. I'm like, wow. I think about my own groceries. I'd never do that,
Right.
But at the same time, when you leave yourself, let's say eggs were my thing, and I'm just going to rely on it is what it is. I'm a price taker on eggs,
Sure.
apparently.
Yeah.
So if I didn't have any security of supply, a friend of mine has chickens now, so there's a whole different situation there.
Sure.
But yeah, that's what I think. It comes to another effect of these past 3.5 years is when your contracts are coming up for renewal, you're like, this really didn't work out for me in a stress test.
Right.
And maybe in 15 years, I never had it stressed to this level, but I never want it stressed again.
Yeah.
So what can we do?
Yep.
Yeah. So I think that there's, a lot, there had been a lot of pain, but there's maybe, what is it? Smarter but wiser market.
Yep.
Yeah.
Makes sense. So I've also got ethylene and styrene on my list. I'll let you pick which you would like to review first. I bet you I know which one you're going to pick.
Look at my friend Ethylene.
Yeah.
The Ethylene I call she.
Okay.
Mysteriously, but yes, she's in my heart. Lady Ethylene, really ethylene in the face of volatility globally and with other commodities, ethylene's been pretty steady. I know that early in the pandemic, ethylene dropped to 8 cents. We know, but ethylene has been in that, in that low 20s. If ethylene goes up to the mid 20s, that's a big deal. And it is a big deal. Certainly an eighth of a cent is a very big deal in ethylene, but that there's not the volatility. I think that's been really what the ethylene market, in my observational opinion, has evolved into, is one where volatility can be limited because there is more participation in the ethylene market than the propylene market just by nature. There's more ethylene produced. There's more people involved in the market, more companies rather. So ethylene you can certainly have a panic, but it will be a lot less short-lived than or it'll be more short-lived, sorry, than in other products. So it's not nearly as maybe precious as some of the more volatile chemicals in terms of price. And I think that ethylene also, it's been, to look at any chart, you've got 2 lines up here and 1 line down there, and that's U.S. ethylene, and that's the other regions up there. So that gives ethylene a lot of options. And I think that ethylene exports, that was to me a major game changer in 2019. And the timing of that, a lot of people look back to the end of 2019 and lockdowns. I'm like, what else happened at the end of 2019 is really the birth of a robust export terminal and market out to the rest of the world. So ethylene is still flowing out of the U.S. in April. So is ethane, and May fixtures, or we're already seeing reports of all the May fixtures. So that's where, I think that there are more options than ever, and ethylene is able to present more options. I think when it comes to styrene, there are fewer options. It is mostly a benzene story.
Sure.
But at the same time, styrene and ethylbenzene, they have been able to rely on a fairly constant ethylene price from this country, which is good, because in the sense that when you're trying to do global business in those combination products, your volatility or your risk is resting primarily with the benzene, and it's because you can rely more on ethylene not going crazy by the time your product gets on the water or something.
Right.
Yeah.
And so the ethylene exports is I guess 2-part question. It's a relatively new thing that we're exporting ethylene, and it's a good thing for the U.S., do you think?
I think options are a good thing in general, for me and you, and the ethylene market and all of its derivatives. Because prior to being able to export the ethylene, it was all in the derivatives. And, it's largely plastics and, glycols and other solvents and intermediates. But the inability, exporting ethylene is not easy, and it's expensive, and it involves, a lot of different logistics because you're taking a gas. It is a lot easier to do bulk liquids and the solids in the plastics. But I also think that it kind of removes a layer of optionality for the whole world, in that now we're relying on specifically resin market dynamics or glycol market dynamics. And to be able to have the choice of saying, we'll take polyethylene or we'll take ethylene that's really, I think, in a lot of senses, I think that it's stabilized world markets in giving it those options.
Sure.
But certainly in the U.S., it's been I think a big improvement to the market. And I don't use improvement lightly because, with prices, if it improves for one person, it's not an improvement for the other one.
Yep.
But in terms of options, improving that option was huge. And as somebody who's watched ethylene for 20 or more years, it was, you saw shipping reports, Altamira to here, you're like, the U.S. was never on a shipping report.
Yeah.
So to be able to, to see that, and to be able to, over time, of course, we saw a real bonanza when it started up, but to be able to see over time, there are some months where there are very few shipments. Sure. And, that it's more data, it's more options. And I always think those are good things.
Yeah. Yeah. Sounds like good things.
Yeah.
Couldn't agree more. Well, so that kind of, I think, wraps up the overview we have. I don't know how much of a crystal ball you have for Q2 and your expectations. I know at AFPM there's a lot of optimism. I think people looking maybe more towards the back half of the year versus a severe uptick in demand and things like that. April, May, June type of time frame. Mm-hmm. But what do you? How are your conversations internally? What are folks saying about pricing, about demand, about some of these energy factors for April, May, June as we come into the nice warm months?
Sure. I think that short-term demand right now, I feel like we can already see it. We're already pricing out May and June in a lot of markets. What I see is always twofold. There's what Petrochem Wire and the price reporting function of Opis is looking at in assessing the forward market. So when I say that we've got backwardation in some markets, it actually only goes through to maybe July. Then it turns contango. So that means that at some point, people in the market, not Kathy, people in the market are out there saying, I've got a lot more faith in September than I do in May. That's interesting. So that curve for ethylene and propylene is a little bit backward and then a little bit contango. So for whatever that's worth, but at the same time, that usually I always say that, the forward market is a great place to manage your risk, but going into it with knowledge of the expert forecasts is also a big component of that. So my colleagues over at Chemical Market Analytics, they're also in a similar vein saying, there is some room for a little softening, the degree of which they get into more as the time is approaching. And they do have some real solid ideas on that as well, of how much softening are we seeing, especially in the short term months, but then longer term, that I think that again, there is more bullish sentiment around the second half of the year, particularly third quarter.
Yep.
But, like I say, I'm always deferring to them saying, they've got full forecasts. You can definitely check those out. They're quite good.
Sure.
But I do think that that looking, again, it's with data, it's more options. So when you see that a forward curve is backward, how steeply backward? Because again, my colleagues at CMA, when we have the 70-cent propylene, April's trading at 50. Their forecast was also like, the higher the price goes, the bigger the correction will be. It's not saying when it drops, the whole year is over. No, let's take this situation at a time. Right. So a lot of times those things work in lockstep. I do think, unless something happened in my memory since the last time we talked, third quarter is usually a pretty decent demand time for manufacturing. It is when the end of the year orders for finished goods, a lot of them are set.
Sure.
And that's usually a pretty good time to be alive throughout a lot of the chains. And then as your third quarter wraps up, you just start preparing for fourth quarter. That might involve, the prayer beads to an extent. Let this be a mild end of the year.
Sure.
But it's more about the preparing. And then I think the most stressful time of the markets that we've seen in the past few years is trying to make a call on what the post-Lunar New Year demand will be.
Yep.
You can have your thoughts, but then seeing if it materializes. And it did materialize this year, maybe not to the extent that some had hoped, but I also think that there's so much caution in the market that there weren't a lot of big bets being placed. So that's where I feel like maybe there's a little bit of calmness blended with resignation, and that's a lot of what we've seen at conferences of it's not bad, it's been worse. I hope it's going to get better. Right. I'm mostly hoping for stability.
Yeah, we had a meeting at the office last week or 2 weeks ago with our 401k provider, and they come in and do a good job of the markets and what's happening, and talks more about just our plan, but what's happening with the stock market and the types of companies in the markets and whatnot. And it was interesting. That stuff's kind of quietly improved year to date in this year. And it talks about, obviously, if you work for a tech company, maybe not the best time to be alive, but a lot of other companies, especially as we move kind of into defense and materials and things like these, are quietly up 4, 5, 7, 8, 10% in some markets. So it's kind of quietly improved. I think we've probably seen that a bit. There's people aren't jumping for joy with 40% more orders, but stuff's quietly doing okay, it seems. So
and I don't know, do you also feel that there is a sense that if things are starting to go well, using the stock market analogy, if things are starting to go well for you or a particular fund in one sector, are you putting out press releases like, this? Because you don't want everybody else, kind of going on your coattails to an extent. So in your distribution business, if you're like, "Ooh, we're seeing something really nice happening in this little segment."
Yeah.
Are you out there telling the world or having that it wouldn't really be a company like yours, but you think about majors and their shareholders saying the best market out there is now, whatever, because that really drives everybody else into what is a little bit your area. Maybe you have a little advantage. You just want to hold on a little bit longer, So I think that sort of, kind of quiet pride has been going on as well from what I've seen, because it is only April. And it's like, you think you hope you're pretty sure, but you've hurt yourself before with your own words,
Yes, no, 100%.
Yeah,
absolutely. Well, we appreciate having you back at the offices here in person. It sounds like we'll plan on having you here for the Q3 episode as well, sometime, peak June, peak.
I'm going to come back
July,
with some friends.
Please do.
We're going to have a party.
We should.
Yes.
We should.
Yeah. So this is terrific.
I'm looking forward to
I always really enjoy our time together, and, and thanks for the opportunity to address your world. So thanks.
Absolutely. Thank you for the insights as always. It's incredibly valuable information and a great supplement to our monthly episode and the other guests we have. So
remember, these are just my own observations.
Of course.
Remember that.
Of course.
But no, I do appreciate that you like them, and I certainly appreciate yours very much. Yeah.
Well, we appreciate it. Well, as always, thank you for listening, whether you're on the audio version or the video version here with the view from Jamestown. So we appreciate it. We'll see you on our next TCC podcast, and we will see Kathy again sometime in July.
Yes.
Thanks, Kathy.
Thank you. Bye.
Thank you for streaming the View from Jamestown podcast edition.
Like and subscribe for more.